Prediction number 2 from Redfin for 2026. They say that home buying affordability will improve because they believe that wages are going to grow faster than prices. It says that they expect the median U.S. house sale price to rise 1% year over year in 2026. They say that prices will tick up only marginally because still high mortgage rates and prices, along with a weaker economy, will curb demand. Home buying will become more affordable because home prices will grow slower than wages for a sustained period of time since the aftermath of the financial crisis. The small price increase combined with mortgage rates dips lower than they were in 2025 means that housing payments will grow slower than wages too. So this is essentially why your grandparents, great grandparents, maybe even at the beginning of your parents' adult lives were able to actually buy homes, is because their wages, like the ratio of wage to house cost when your great grandparents or your grandparents were around, was that ratio was much, much closer. For instance, although the wages would have been lower decades ago, the cost of a house is way down as well, right? And so they were, let's say they were making like 20,000 a year, which they would not even qualify to be middle income. That $20,000 that they were making, they were buying like a $40,000 house or a $60,000 house or an $80,000 house. And that house, only being 4 times their income of $20,000, put them in a much better position to afford that mortgage at a much lower rate. Now, I want you to think about this. You could have 2 people working in your house, each one making $100,000. In that house, with each person making $100,000, so $200,000 gross income. And in some cities, you can't even get into a house, a starter home, for less than $600,000 or $700,000. So the rate of housing costs have exponentially increased against the rate of wages, right? And so in this prediction, they're expecting the wage rate to grow faster than home prices, which, I mean, it's not going to obviously go back to, 1940s, 50s, 60s, 70s levels in terms of the ratio, but whenever wage rates versus housing rates are not crazily outpaced, if whenever wages are not like absurdly outpaced by housing rates, that makes purchasing a house easier. And couple that with lower mortgage rates, it makes it a little bit more palatable for someone to buy it.